Uber is the number one ride sharing application in the world. It's also diversified into food delivery, and they also handle freight. It's a company that has really grown to the number one position quite effectively. Uber is a real dominant force here in the United States, and they continue to expand globally. It's a great business. I like the fact that Uber can really grow by just attracting more drivers and attracting more customers that will then have those drivers give them a lift. The amount of capital they have to put into the business is quite small. They just have to be the best technology company in this space. They have the best experience for the person who's taking a ride. All those things are definitely the case for Uber. They're a great company and their technology is number one. I wanted to take a look at the company from an investing perspective since they did announce their earnings today. And I have a fresh set of financials to take a look at and put through my valuation model. I'm a current Uber stockholder, and I'll make a decision whether I should buy more shares, hold, or sell my shares in Uber. Let's take a look at their fundamentals. The market cap of the company, and this is before the market opens in a few minutes, is 122 billion. I think it's going to be in the low 130 billions when it opens because the stock's supposed to open about 7% higher today. The net income, the revenue of the company is 39 billion. That's great. They've been growing really fast, which is great. They're already profitable, which is also excellent. As I'll show later, they generate really good free cash flow. That's great. Their PE right now is 93, and the reason for it is their PE is really their earnings per share is really low, but it's really going to grow fast, as I'll show later. It's a strong buy by analysts saying, hey, it's discounted by close to 43%. Let's see if I agree with them a little later. When we look at their growth, it's just been excellent growth, especially in 22, just phenomenal growth. And as we'll see in the earnings report, the growth continues. This is a cash flow generating company, the sign of a very valuable company. That the fact that they can generate a lot of free cash flow and they can use this cash to grow the business, return it to shareholders, acquire other businesses, you name it. It is a very valuable business. Looking at earnings per share in the forecast, 34 analysts cover Uber and they say, hey, this is a great company and it's discounted. All right. Good to see that analysts favor Uber. There's good sentiment around the company. They have a relatively low earnings per share, but as you can see, it's really going to grow fast. So I'm going to put that information into my valuation model. Really have a low starting point, but a high growth rate in the future since the company is growing very quickly and their profitability is really, really going to grow as well. Uber announced their earnings and the market really liked what they saw. The company grew their bookings by 19% year over year. Income from operations up 71% year over year. Cash flow was much higher than I expected. I don't know what analysts were expecting, but I was forecasting a lower number. It's okay if they exceed the free cash flow that I expected. That's awesome. Overall, the business is just doing really well. And again, this business doesn't need a lot of capital to grow. It could just keep growing the number of drivers. Those drivers bring their own car. They maintain the car. They take care of the cars. They take care of the customers. It's a really good business. So overall, their earnings were really good. How desirable is the Uber business? Here's my desirability quadrants. And I like buying businesses in the green. These businesses have really strong barriers of entry against competitors. New competitors can't come into their space and compete with them. They can't compete and take customers, take revenue, maybe lower prices, and overall lower profitability for the company. And businesses in the green tend to be the most valuable companies, companies like Microsoft, Google, Meta as examples. And Uber most definitely has barriers of entry. When you look at the Uber app is loaded in so many people's phones, they have that network advantage. The brand is recognized. Their service is very dependent on and relied on. They continue to diversify their products. They have a membership program. So the food delivery is very effective. So all those things really make up what I believe is the number one ride hailing company that has a significant lead on all the rest of the competition. I put them in the green. The leadership position that Uber has attained shows that customers prefer their app, prefer the service. Drivers prefer driving for Uber. And I'm sure there'll be a few exceptions, but at the end of the day, they got to number one by probably out operating, out thinking, out innovating everyone else. And their lead is significant. Lyft is the other company in the US, and Lyft is really lagged behind. There's a big separation between Uber and Lyft. I will gladly put Uber in the green, making it a very desirable company for me to invest in. I ran an evaluation for Uber based on free cash flows and earnings per share, and I arrived at a 33% discount on the stock. Looking at their free cash flow, I believe that their cash flow is going to be better than $4 billion this year, but I wanted to be conservative and keep the forecast that I had before. I did lower my discount rate since interest rates are falling, and that shows how interest rates really do have an effect on the valuation of companies. The growth rate is going to be very dynamic, and they're actually growing faster than that now, but let's just keep it at a conservative forecast. I'm forecasting these cash flows over the next 4 years, and then terminal value, all cash flows beyond year 4. And the value of that cash is significant, $192 billion. Adding cash, taking away debt, I get to an equity value of $188 billion. The market cap that I estimate the company is going to have upon the stock market open is going to be $131 billion. So when I compare the value per share versus the stock price that it's supposed to open at, there's a 43% discount based on free cash flows. And I really trust free cash flows more than earnings per share. It is a true measure of a value of a company. Performance in earnings per share, it's expected they're going to do about 90 cents per share this year. I give them a very high PE because it's a high growth company with leadership position in their marketplace. So that's all very good. The growth rate I'm going to go with is 30. And that's below what analysts are expecting, but that's a good number for me. And it gives me about 11% discount when I compare the value based on earnings per share compared to the stock price. So when I blend the two, putting more weight on free cash flows, I get a 33% discount on Uber. Number one company, high growth company that is really just getting bigger, better over time. So my decision on continuing to buy shares, hold or sell depends on looking at the company, looking at the balance sheet, and then looking at the discount. The company gets an A plus. I really like how they continue to grow. I like the competitive barriers they have in the form of their exceptional platform, the growth in drivers, the growth in riders as well. I like that they diversified into food delivery. I like the membership program they're offering, and a lot of things about Uber. They're even trying to get into freight. Hasn't been wildly successful, but maybe someday it will. Overall, I just really like the company. The balance sheet's in great shape. They have well below 3 times EBITDA, and their cash balance is really high. So balance sheet's in great shape. And the discount is substantial, given that this is a very good company. The stock has been rising over time, but still, the company's value is growing faster than the stock price. That said, I'm going to be buying shares of Uber and continue to grow a already large position in Uber and making it bigger. This is going to be one of the companies that I believe is going to help me have a great growth portfolio and have a great return on my investment. So that's my video on Uber. Please keep in mind, I'm just an investor, just sharing my experience with you, not recommending you buy, hold, or sell Uber. Please make your decisions on investments independent of this video. Thanks for watching. Good luck investing in 2024.